Hello everyone, it is our trades back here with another video, and in this video we're going to talk about how to succeed using prop firm evaluations. We're going to talk about the differences between using a prop firm evaluation and using your own money, or using a futures account, a brokerage account that you fund on your own. Some of the nuances and differences between those things. We're going to really harp today on consistency rules. We're going to talk about passing challenges and that sort of thing. Before we get into it, guys, I have recently acquired an affiliate coupon code from Apex Trader Funding. If you want to support your boy here, all you have to do is sign up for an Apex Trader Funding account, either using my affiliate link or enter coupon code RTRADES, all one word. Again, that's RTRADES, all one word, RTRADES, in the coupon code section where you would enter Save Now or whoever you're using. All you have to do is enter RTRADES, and it will give you the best discount that Apex has available. Okay, guys, before we get into it, futures trading and trading of any derivatives products or trading of any kind, including stocks that are not derivatives, comes with substantial risk of loss, including loss of your initial capital. Do not trade with funds you cannot afford to lose. We are currently experiencing very volatile markets, and if you go into trading right now, as of today, just understand that you're taking on substantial risk. So, using prop firms is one way to kind of minimize that risk. Okay, guys, so in beating your prop firm challenges, the first thing that you need to do is you need to pick which prop firm you're going to use. Now, using X here, I've gone to a channel called Prop Firm Match, and these are some of the top prop firms in the industry. Top 15 prop firms, organic website traffic for March. FTMO is at the top, the 5%ers, Top Step, Funded Next, Apex Trader Funding. I use Apex Trader Funding, is one of the prop firms that I use. I have used FTMO before, but that is mostly a European offer. I've also used Top Step before. I find that Top Step is more difficult to pass than Apex Trader Funding, but it's another fine prop firm as well. E8 Markets, Funding Pips, My Funded Futures. I don't recommend My Funded Futures because of that company's CEO right now. Quant Teckle, Instant Funding, Blueberry Funded. Again, I'm not super familiar with these. You're going to want to do your own research. Darwin X Zero, Alpha Capital Maven, and Goat Funded Trader. I have heard some things about Goat Funded Trader that are positive. But again, I'm not 100% familiar. The other prop firm that is not on the top 15 list, but that I have been using, is a prop firm called Tradeify. So I have purchased a 150K. So if we go to their pricing, what I have done is I have purchased a 150K straight to SIM funded account using code TIP, which is a 40% discount. So it cost me a little over $400, but it's a straight to funded account. So there's no evaluation phase that you have to trade. It is cheaper if you go to the advanced account, then you use a coupon code there. You can pass a $9,000 challenge, and then you can save some money doing that. I went ahead and spent the money to go straight to SIM funded, but again, using Tradeify, you can go through the process, use a discount code, and get up to 9,000 simulated funds, which could ultimately be quite a bit cheaper than going to straight funded, about half the cost. So you might want to consider that if you're using Tradeify. The first piece of advice, other than researching the prop firm that you're going to use, first piece of advice that I want to offer is read the rules. All right, read the rules behind how you get payouts and what it takes to get payouts. So understand what that company's rules are to get to a payout, and do your research. Don't just go in and assume that you'll just trade the way that you're usually trading, or the way that you trade with another prop firm. They may offer different products. They may have different rules. And so you really want to go in and research the prop firm that you are actually going to trade with. So for example, if we go to Apex Trader Funding, we can see here that we have a performance account and live account rules. You should really read this entire page. All right, that's my first piece of advice. Same thing if we go to the straight to SIM funded accounts here on trading, on Tradeify. We want to go to the payout policy. We also want to go to the consistency policy. which is probably the most important policy. We want to learn what is it going to take for us to get a payout. So we know we've got a 20% consistency rule on Tradeify, 10 trading days, and then we know that we have a profit goal of $9,000. Okay, so when you are trading a prop firm account, make sure that you understand the account. Make sure that you go in eyes wide open, knowing what the rules are and knowing what it's going to take to get a payout. That's the first thing. Number two, I want to talk about the biggest difference between trading prop firms and then trading your own account. So most of these companies are going to have what's called a consistency rule. What does that mean? When you are trading your own brokerage account, you're trading your own money. There's no limit to how much money you can make. There's no limit to how much money you can lose. Um, there's no rules in place on you at all. It's your own. It's your own money, other than having the margin to trade. That is not exactly how it works on prop firms. So to be frank, you don't want to make too much money in a single day on most of these prop firms because they're going to have consistency rules and they're going to have targets. So, you're going to go onto YouTube, you're going to go onto X, and you're going to see traders that have 20 copy traded accounts that are taking out 20, 30, $40,000 payouts. I just want to caution you that those people are typically one in a million. For the majority of you, what you should be doing is trading very conservatively. You should be buying one prop firm account, and then you should understand the rules and really understand what that means. So let's talk about the consistency rules on Apex, the consistency rules on Tradeify, and I'm sure that other prop firms have similar consistency rules. Okay, so on Apex Trader Funding, this is on your performance account. The 30% consistency rule ensures that no single trading day accounts for more than 30% of the total profit balance at the time of a payout request. This rule promotes consistent trading practices and discourages high-risk, erratic trading styles. Key details to note: profit restrictions. If a single trading day generates more than 30% of the profit balance accumulated since the last approved payout, or since the start of trading if no payouts have been made, there may be restrictions on profit withdrawals. Reset after payout. Once a payout is approved, the 30% rule resets and applies only to profits earned after the most recent payout. It does not look back at previous trading periods. Exceptions. The rule applies until the sixth payout or until the account is transferred to a live prop account. At that point, the 30% rule is no longer in effect. So guys, when you're looking at somebody like JadeCap, who's another ex-trader, or you're looking at other maybe Trades by Matt or Dr. Tip or other folks that have been prop trading a long time, they have presumably more than six payouts, or they're on a live account. So this rule no longer applies to them if they're trading on Apex. Probably going to apply to you though. Okay, it applies to me. This guideline is designed to ensure disciplined, consistent trading and is not meant to penalize traders who maintain a structured trading approach. However, it discourages traders who use a high-risk windfall strategy to secure withdrawals without maintaining consistent trading behavior. Now, guys, that is true, but it's also a way for the company to hedge its own risk. So, again, there's a reason why prop firms are cheaper than trading your own money. They're going to put guardrails on you. They're not going to let you take out $50,000 in your first day. They're not going to subject themselves to that kind of risk. So you should not go into it with that same mindset. Whereas if you're trading your own options account or your own brokerage account, you can take as much money out of the market as you want. But when you go into a prop firm account, there is a reason why they're cheaper, and these companies are going to be hedging their risk against big windfalls. So you need to go into that mentality of there's only a certain amount of money really you want to make in a day. All right. The 30% rule is reviewed during payout approvals, and payouts may be denied if the profit balance does not align with the rule's parameters. Traders are encouraged to trade consistently and adhere to these guidelines to avoid issues with payout approvals. So again, guys, this is a way both to keep you consistent in your trading, and it's a way for Apex Trader Funding to hedge its risk against you, basically. So that's why that's there. So let's use an example of how this consistency rule is going to play out. So I'm going to take you over to Tradeovate now. I'm going to take you to my performance account that I've recently activated. I am done trading for the day today, and I've made $2,563.63. So what you want to do is you want to open up your calculator. You want to take the number that you've made in that profit and divide it by 0.3. That's going to give you the total amount of profit that you're going to need to make according to the consistency rule before you can take a payout. Okay. So for me, it's $8,545.43, assuming that today's $2,563 profit is the largest profit. Okay. So there's other rules to get payouts on Apex Trader Funding as well. When you take your first payout, they have a safety net. So I want to get into Apex Trader Funding safety net rule and talk about how that is another hurdle, basically, that you have to overcome. Okay. The safety net requirement rule ensures that your account maintains an adequate balance to protect against significant drawdowns. This rule applies to both new and existing accounts, but it's only required for your first 3 payouts. After this, the safety net is no longer applicable. How the safety net is calculated. The safety net is determined by adding $100 to your drawdown limit. This calculation ensures that there is a cushion in your account to absorb losses. For example, the account size is 50,000, the drawdown limit is 2,500, so the safety net is 2,600. Once the trader's balance exceeds $52,600, which is the drawdown plus the safety net, they can request a payout. For more details on how the safety net requirement rules affects payout requests, please visit here. For example, on my 300K challenge, the drawdown limit is 7,500, so I have to reach $7,600 in profit in order for me to take a payout. But as we've already mentioned, with that 30% consistency rule, I have to reach now a total of $8,545. So I have to get above the safety net rule in order for me to take my first profit because of the consistency rule. So what do you gather from this? And Apex might have different rules a little bit than other prop firms, but they kind of all follow this same pattern. Don't go into a prop firm expecting that you're going to make $50,000, $20,000, $30,000 on the first payout. They're not going to allow you to do that. They're not going to subject themselves to that sort of risk. And so they're going to put guardrails on you. What does that mean? When you're trading a prop firm, unlike trading your brokerage account, you need to make your profit for the day and then you need to leave. You need to stop trading for the day. Now, that's wisdom that you can apply to a live brokerage account, sure, but it's especially important in a prop firm account that's going to have consistency rules and guardrails on you. So, to be honest with you, yeah, am I happy that I made 2563 simulated funds today? Sure, but it's not optimal. Optimal would have been a little bit less than 2,000. So, again, if I were to continue to trade and make a larger profit today, that might actually work against me getting a payout because of the consistency and the safety net rule. So that's why I have to stop and wait until the next trading day, okay, because of those rules. All right. Also, one thing that I want to talk about when you are trading Tradeify. So let's go over to Tradeify. Tradeify is another prop firm that I have bought a 150K simulated account on. I'm not an affiliate with Tradeify yet, but I'm probably going to be asking at some point if they'll take me on as an affiliate. Tradeify makes it harder than Apex on the consistency rule because it's a 20% consistency rule on the straight to funded account. So what does that mean? It's actually more difficult to abide by the 20% consistency rule than the 30%. And I'm going to give you an example of that. So on my Tradeify account today, I made $1,765.12. Now, in order to get to my first payout on Tradeify, you can see that they have a payout profit goal table. So I've used a $150,000 account, and this is going to be my first payout if I get there. So my profit goal is $9,000. So I need to get my Tradeify straight to funded account up to $159,000 in order to take a profit, but it's more difficult than just that because Tradeify is a little. It seems like it's a little bit more difficult, not terribly more difficult, but a little bit more difficult to get to a payout on Tradeify because they have a 10-day between a minimum day traded. Apex Trader Funding has an 8-day minimum to get paid. I think Top Step is the best in terms of the days to get a payout. I think Top Step is 5 days. I'm hoping that the industry will continue to go down on this. Again, I'm not disparaging Tradeify or Apex for having an 8-day payout period on Apex and then a 10-day period on Tradeify. All I'm trying to impart on the audience here is you need to know the rules of your prop firm going in. Okay, you need to know the rules and what it actually takes to get a payout, and then structure your trading according to that. So Tradeify could probably do a little bit better and come down to 8 trading days to get a payout, or come down to 5. I think Top Step is 5, so that would be maybe one way that Tradeify could improve. But we'll see if they want to move in that direction in the future. It's totally up to them. I'm going to trade with them either way. Okay, so the 20% consistency rule. So not only on Tradeify do I have to get to a $9,000 profit, but I have to do it in small chunks. So what we're going to do is we're going to go back to the calculator and open up calculator, and we're going to type in 1,765.12. We're going to divide that by 0.2. So again, you can see that the 20% consistency rule is going to put guardrails on how much money you can make in a single day. I don't know if Tradeify has. One thing I have not been able to ascertain is whether Tradeify has a consistency rule when it comes to. I don't know if Tradeify has a consistency rule when it comes to their live accounts, or if there's a way that their consistency rule goes out of effect. You saw in Apex Trader Funding that if you reach, let's see, if you reach the payout, the 6th payout, or until the account is transferred to a live prop account, their Apex Trader Funding's consistency rule is no longer in effect after the 6th payout or the live account. I do not know about Tradeify. In fact, if you're Dr. Tip, or if you're somebody that's familiar with Tradeify, I don't know if the consistency rule goes away once you've reached the live funded account on Tradeify, but that would be interesting to know. That's something that I would like to know. But basically, you can see that I have to make at least $8,825.60 to reach the 20% consistency. If I make more than $1,765.12 in a single day, then that number is going to go a little bit higher. So I could make a little bit more money on the Tradeify account today. I could make about $1,800 just to get it to that right number to get the first payout. As you can see, guys, when you are trading Apex or you're trading Tradeify or any prop firm that has a consistency rule, you don't want to make $1 million in a single day, because you're actually hindering your ability to get a payout. Your objective is not to make as much simulated money as possible. Your objective is to get payouts. So the way that you do that is you follow the rules and follow what the company is guiding you towards. So, for example, Tradeify on the $150,000 account, they're kind of saying that you need to be somewhere between $1,500 and $2,000 profit in a day. Somewhere that's kind of a nice number to reach. All right, $1,500 to $2,000 in a day, which is obviously a really good day. But if you make $10,000 in a day, then you're just making it that much harder. So let's say that I were to go on and let's say made $5,000 in a single day, then I would need to make a total profit of $25,000 before my next payout, before I could get a payout with the consistency rule, and that makes it a lot harder. So Tradeify is kind of pushing you towards $1,500 to $2,000 in a day, in my opinion. Apex Trader Funding is pushing you. It's somewhere between $2,000 to $3,000 in a day if you're trading the $300,000 account. These kind of make sense. They're about 1% of the simulated account that you're trading. So they really don't want you to make, they want you to make between 1 and 2% of your total account balance. This is for both companies. I'm sure that they've kind of drawn their models to be around 1 to 2% profit per day on their consistent traders. So again, you don't want to make more than 1 to 2% of whatever starting balance you've paid for. You don't want to make more than 1 to 2% of that in a single day when you have a consistency rule. Okay, so there's that. Also, with that being said, we've talked about that. Because the markets, now we need to talk about trading volatile markets. So let's say that you've decided that you want to trade a prop firm, and now you're going into a volatile market, kind of like we're facing now. The Nasdaq, the micro, the Nasdaq, and the Russell 2000. I want to give you an idea of just how much the markets are moving and why you should almost certainly be moving to the micros. Okay, so back in 2024, when I was trading, the average S&P 500 day would be between 0.5% to 2% maximum. 2% was a big day, so the S&P 500 futures would move between about 0.5% and 1% was kind of an average day. And in that environment, you could probably get away with trading full size contracts. But now we have markets that are moving, oh my God, greater than 4 to 8% swings in a single day, which is huge. The markets have become ridiculously volatile. So what does that mean? If you're trying to hit a daily profit of, let's say on Tradeify 1,500 to 2,000, or an Apex 2,000 to 3,000, what does that mean? Basically means you need to trade the micros, especially during the U.S. open market, the open market session. Guys, if you are trading the full size NASDAQ, that's $20 a point. To give you an idea, let's just say you're trading one full size NASDAQ, right? And I'm going to bring out the handy dandy calculator, and we're going to type in 20,000 times. It's moved 1,072 points today. Okay. It's down today on one full size NASDAQ, $21,440. And you may be thinking to yourself, well, wouldn't that be great if I made that on my prop firm if I were just holding short the whole day on a full size NASDAQ? Again, because of this consistency rule, they're not going to give you a payout for that kind of money on your first payout. They're not going to do it. They're not subjecting themselves to that kind of risk, and it's a part of your rules. So no, you really would not want to do that. The markets are moving too much. They're way too volatile during the U.S. session to be trading full size ES, full size NASDAQ, even full size Russell, which is $50 a point, would be way too much. And then the full size Dow is $5 a point. I need to change those down to the micros as well. Crude oil is moving a lot as well. Crude oil is $10 a point. Gold futures is $10 a point. You might even want to consider trading micro gold, micro crude. Silver, I think, is $25 a point on the big contract. So on the mini contract. So again, guys, when you're trading in these ridiculously volatile markets and you're trading prop firms that do not want you to make more than 1 to 2% in a day, you need to bring it down. So don't trade the full size contracts, trade the micro contracts. And you'd be surprised, with how volatile the market is, how much your account can be swinging. Also, guys, when you are trading on Apex Trader Funding or Tradeify, which has a live drawdown, this is going to be different what I'm about to say, whether you're trading with a maximum drawdown or you're not. Basically, a live, I'm going to show you here on Tradeivate what a live trailing maximum drawdown looks like. It follows you. So your peak watermark, let's say that you have an open trade that, let's say you start your account at 300,000 and then you make an open profit. So the position is open of 1,000. The drawdown is referenced against the highest P&L in your account. What does that mean? If you let a trade go into profit by 1,000 and then go back to break even, which to be honest with you, Tom Hugard talks about it, that's something you might want to be doing more on your live account where you really want to make big returns. Uh, Using a prop firm with a live trailing max drawdown is a little bit different. It sort of encourages more scalping and more small trades. Why? Trades where you're taking your profit probably more often than you would on a live brokerage account, because it's gonna the maximum drawdown or the trailing drawdown follows you. So if you're at 30, say 301,000, and it comes back to 300,000, your maximum drawdown left in the account is still going to be 6,500, even though you are where you started. That's a little bit different than a live brokerage account, where obviously if you're just trading your own money, your live brokerage account, um, open profits are open profits, and you're more likely to go ahead and risk those open profits. When you're trading a prop firm account that has a trailing max drawdown, there's a lot of balance that goes into it. You generally need to be taking your profits faster, because, again, of that trailing max drawdown. And the most important thing when you're trading an Apex trader funding account or a Tradify account or any account that has a trailing maximum drawdown, the most important thing is that you're keeping that maximum drawdown as close to the maximum as possible. So if you can end the day, whether you're trading on an evaluation account or you're trading on a PA account, if you can end the day close to or near your trailing maximum drawdown, that's a really good day. Again, so kind of tailoring it towards what the company is looking for, what the company is going to reward in terms of payouts. Somewhere between 1 to 2% of your total account size is what you want to make in profit. You don't want to make more than that, and you want to keep your trailing maximum drawdown as close to the maximum as possible. So you want to be taking your profits consistently. All right. If you are trading a static account, or an account that does not have a trailing maximum drawdown, then you don't need to be as concerned about taking your open profits, which is more similar to a live brokerage account. So that's something else I wanted to mention. All right, guys, just to wrap up and sum up this video, the first tip to beating and winning on your prop firm account is to study your prop firm account. They tell you what you need to do in order to get to payouts, in order to get to a live funded account where you can start basically trading professionally on a very low cost basis. Remember that these companies will typically take 10% or 20% of whatever you're making. So even if you are a profitable trader and you're following their rules, they still make money off of you because they're gonna make 10% of whatever your profits are. So as long as you're following their rules and you're being very strict about following their rules, they should be paying you out. Although I know that there can be issues with that. Research. The first tip is research the company that you're trading for. Make sure that you're trading a prop firm that has the products that you want. One other thing that I did not mention in terms of the products, these are all the different products that I trade. I generally stay away from the agricultures because they have a different schedule. They're also very affected by seasonal factors. So I generally do not trade agriculture futures or bonds. I stick to currency futures, crude oil, silver, and then the stock index futures, which I trade on the micros. If you're a bond trader, that's fine, but I don't trade bonds at this point, bond futures, and I don't trade agriculture futures, although I know different prop firms offer bonds in agriculture. Um, the next thing I wanted to mention after researching the company that you're going to be trading for is number 2. Trade the micros. Okay, trade the micros as long as we're in this sort of really, really volatile environment. Next thing I wanted to mention, guys, is make sure that you're trading in the direction of prevailing trend. So this can sometimes be difficult to ascertain, but basically most trading days in the U.S. financial markets are going to be broadly trending down or broadly trending up. And you want to focus on your prop firm accounts and probably on your live brokerage accounts as well, to be honest. Don't trade reversals. What do I mean by that? For example, right now, let's say this is a good example. We have crude oil up, and we're currently kind of on a little bit of a pullback. but the overall trend for the day has definitely been down. Okay. What does that mean? That means I'm only trading crude oil for today's session short. All right. I'm not going to be trading crude oil long because that would be a reversal trade. And generally speaking, I think on your prop firm accounts, you want to avoid trading anything that kind of looks like a reversal. Just trade in the direction of prevailing trend if you can tell what prevailing trend is. Next piece of advice that I want to give is try to avoid major news events. This is when Donald Trump mentioned that he was going to kind of back off on tariffs. That's what happened yesterday. Again, the reason that you want to sort of be avoiding economic announcements or news events when you're trading your prop firms is not because they won't let you. Most prop firms now, including TopStep, Apex, Tradeify, I don't know about FTMO, but most of them are going to allow you to trade through news events. But if they have a consistency rule, again, you want to reach a certain amount of profit and then you want to stop. That certain amount of profit is about 1 to 2% of your account balance on with getting a consistency rule. So again, let's say even if you were long, it'd be great if it were in your live brokerage account where you can make unlimited amounts of money. But if you were long this whole move on crude oil when Trump came out with the tariffs, you can see the same thing on the micro Nasdaq. If you were long during that move on an account that had a consistency rule, well, now you've just made your ability to get a payout a lot harder. So again, avoiding news events, economic releases can be a smart thing, especially when you're subject to a consistency rule. If you are not subject to a consistency rule, you still might want to avoid news events and economic releases just because they're really volatile and they can be difficult to trade. All right, so basically what I'm saying is focus on trading on the prevailing trend and try to avoid news and economic events where possible. You can't always avoid them, but when you can, whether your prop firm lets you or not. All right, guys, I hope that this has been a good video on understanding and how to overcome your prop firm challenges and get to payouts. I am done trading for the day because I've reached my the targets that I had in the market. I might go trade my live brokerage account. I might not. But I can't trade these prop firm accounts anymore because I've made as much money as I should on the day. All right, guys, this has been R Trades back here with another video. Please make sure to like, comment, subscribe, and use coupon code RTRADES when you're purchasing your next Apex Trader Funding evaluation account.